And we'll go ahead and dive right in to our to the illustration software. So I'm going to pull over our Sales Link portal. I've already logged in. I logged in under Global America Financial's profile, so that way we can look at a Sales Link portal that may seem somewhat familiar. For those of you that have not logged in and are contracted with F&G, once you're contracted, you're automatically given an agent portal. So you'll log in with your agent ID, and then when you log in for the first time, your password is going to be a lowercase letter s followed by your full social security number with no dashes. I can show you where to log in here. And again, once you're contracted, you're automatically given access to the agent portal. You're welcome to reach out to me or the internal sales team. We can also show you how to log into your agent portal. So if you just go to fglife.com, this is our site that is consumer and producer facing. And then in the upper right-hand corner, if you click on Login, select Financial and Insurance Professional, this is going to take you to the Sales Link agent portal. My information, of course, is already saved here, so I'm not going to log in, but we'll go back here to Sales Link, and we'll navigate to the illustration software. We'll go ahead and click on Sales Tools Illustrations, or you can click on Sales Tools here at the bottom, and then Illustrations. That will take you to our where we can access the online illustration software through iPipeline. You can click on this ugly picture here, or these words that say website, and that will open up another tab that takes you to iPipeline. Just to reiterate, iPipeline is the vendor that we use only for illustrations. So we use Firelight for e-apps and then iPipeline for illustrations. If you've worked on a case before, you want to go back in, make some changes, or maybe pull up the illustration, you can view that under View My Cases. Otherwise, let's just go ahead and click on Start New Case. We'll just put in the client's information. Today, we're working with a valued client, maybe a 40-year-old female. And then F&G, again, located here in Iowa, so we'll just use that as the state of issue or the writing state. Product type, select Index Universal Life. Find available products. You can see our 3 IUL products listed here. And of course, we're going over ExecuDex. So we'll go ahead and hit select under Quote/Illustrations, and that will take us to the Quote/Illustrations tab where we can make all the changes and input additional information about the case design. So additional options, of course, on the left-hand side, if we need to make any changes, we can do so here. Otherwise, the client information is listed here at the top. You can see our valued client. You can plug in the date of birth or their age. It's going to default to Express non-tobacco for the underwriting class, or you can select Express Tobacco. There is a flat extra option here. I will tell you, I've never seen an ExecuDex case where there is a flat extra. Think of maybe an airplane pilot. That may be a reason for a flat extra where we can still approve them through ExecuDex. And then if you want some product information, there is a link right here that will take you to the product information, or this is actually that pre-screen questionnaire that I mentioned, located right here in the illustration software. So the solves when it comes to ExecuDex are going to be a little bit different compared to our other products. Again, we're trying to make it an easy process when it comes to illustration and application. So we'll look here under our solve section. We're going to solve for premium with a specified face amount. So that means we want to solve for a premium if we plug in a face amount. Now, from my experience, that's not typically the case. The client is coming to us saying, hey, I've got $500, $750, $300 a month. What is the face amount? So if we select here, solve for face amount with specified premium, that allows us to put in a premium and the software is going to solve for the death benefit for us. So let's just assume our client has a $750 monthly premium they can pay into the policy on a monthly basis. So we'll change our premium or our payment mode to monthly. We'll input our premium amount of $750. And for this 40-year-old client, let's just say she wants to pay to retirement, right? She could pay it up sooner. She could pay longer, but for the sake of this illustration and just giving her an idea of how this can illustrate, we're just going to show paying premiums to A65. So A stands for age. Y stands for year. So I'm going to go ahead and put in A65 in the pay premium 2 section. Now, the funding bonus amount, those funding bonus riders that I mentioned, we have 3 options here. So now that we're solving for a death benefit, we can solve for a death benefit that has a high funding bonus premium of $750 a month. We can solve for a low funding bonus premium of $750 a month, right? That means the client's going to get either that higher bonus in contract years 11 through 30, selecting the high bonus amount. The low bonus amount, they're going to get that low bonus in contract years 11 through 30, or this ExecuDex accumulation solve. So this is going to be more of that max funded case design where there's really no additional room for premium, and we're going to solve for the minimum death benefit, and we're not looking at these low or high funding bonus riders. We're not solving for that death benefit that equals exactly that high or low funding bonus rider. We're solving for a low death benefit, and our premium is going to be well above those high or low funding bonus riders. So let's start with the ExecuDex accumulation solve here. So that minimum death benefit, we're going to do that typical max funded LERP case design where we're using an increasing option B death benefit during the premium paying years and then switching to level afterwards. So we're going to make that death benefit change from option B to A the same year the client stops paying premiums. So age 65, again, that's going to match how long we're paying premiums for. And then we're going to make the B to A switch to age 65 as well. I'm generally not selecting reduced death benefit to minimum. You can do so. So after the client stops paying premiums at age 65, maybe to maximize accumulation, they want to have the death benefit taken down as low as possible or back down to that corridor limitation. Under the loans/withdrawal section, solve for max income. That's typically what we're doing. We want the software to solve for the max income that can come out of the policy. I'm leaving the cash value of $1,000 at age 0. That's age 120. So how much money can we borrow from the contract targeting $1,000 worth of cash value at age 0 or age 120 is what that means. Scrolling down to the income stream calculated, the income type, we're going to leave that at loans. Income mode monthly. The start age, we're going to type in here the same age that premiums stop generally. So if we want to show income after premiums stop, we're going to put the same age in here that the client stops paying premiums. And I'll show you what that looks like. So we're going to start income at age 65. That's actually going to illustrate in the illustration at age 66. Let's just leave the number of years at 25. So how much income can we take out from the age of 65 to 90? And the software is going to tell us that. And then it defaults to a variable loan, again, that contractually guaranteed variable loan rate of 5%. Under the solve inputs there, we'll go ahead and hit OK. Really, the last portion of the illustration software is just selecting the index strategy. The S&P strategy illustrates slightly better with a max illustrated rate of 6.92%. So let's go ahead and leave it at the S&P strategy. If you wanted to change it, you could just zero that out, click on Barclays and type in, and of course you can always do a 50-50 blend as well, or mix that up however you would like. Just to give you an idea of what other options are available in the illustration software, we have an additional benefit section, or excuse me, the additional benefits for accidental death benefit. Again, not really using the accidental death benefit rider when it comes to ExecuDex, but it is an option. And then when it comes to output options, these are just additional reports that you can add to the illustration to help explain or illustrate the product itself. I'm typically just leaving the monthly charges and expenses report, which is what it defaults to. So we'll scroll back up to the top here, and then we'll click View and Print Illustration. It'll take a few moments, and this is going to give us the full PDF that we would present to our client and then submit with the application. There is the ability to click Calculate Results. This is just going to give you as an agent a quick glimpse of the numbers. The full PDF, you're going to click View and Print Illustration. I'll zoom in a little bit. We're not going to go through all the pages here, of course. We're just going to jump down to Tabular Details, which is on page 8. Actually, I want to stop right there. So if we look at here, page 7, It's the rider's description, and as we discussed, the funding bonus rider. This is essential when it comes to ExecuDex. This is what makes the product so powerful, is the funding bonus rider. And we can see here that for this client, they would receive, if they pay a minimum premium years 1 through 7 of $5,754 in contract years 11 through 30, they're going to receive a 1% bonus. Now, if they can't meet that premium amount in years 1 through 7 and they can only pay into the contract $4,997, they're still going to get that funding bonus rider. It's just going to be less at 50 basis points. So that's where that's located again. That's page 7 of the illustration. And let's jump right into the tabular details section. So at the top, under summary of coverage, we have our female, age 40. The death benefit comes out to be $207,000, just north of $207,000. Our initial monthly premium of $750 a month, well above that higher low funding bonus premium required. That comes out to be about $9,000 a year. So we're multiplying that $750 monthly premium by 12 or times 12, giving us that $9,000. We can see the premium going in all the way until age 60. Far right-hand side, we can see our account value, surrender value, and net death benefit based upon our non-guaranteed assumptions using that S&P strategy with a 6.92% illustrated rate. If you're curious, we have 3 other assumptions here just to give you an idea. What is the absolute guaranteed section year after year, no index credit, the client's only receiving a rate of return of 0.25%. This is how we could expect the policy to perform. The middle column here, the 4.75%, is what our fixed account. What if the client just decided to put all of their funds into the fixed account? What would the policy account value, surrender value, and net death benefit look like? And if we scroll down here to the bottom, we can see the income under the loan/withdrawal section. So loan/withdrawals. And in this scenario, the client's been able to borrow $48,000 a year from her contract. At the age of 65, she has a $739,000 death benefit. Highlighted in purple here, that just means we're switching from an option B to an option A death benefit to maximize distributions out of the policy. And then we'll see that this income goes all the way out until age 90, which is what we requested in the illustration software. So she's paid in $225,000, $750 a month, all the way to age 65, and she's able to borrow just north of $1.2 million income tax-free, right? How awesome is that? That's very powerful. I always like to point out those numbers, and then it's always fun as well just to jump down to age 100. If she lived to age 100, she still has a $201,000 death benefit remaining. So let's just take a quick look here, just another design. I'm going to keep everything the same, but I want to show you what those high or low funding bonus amounts look like. So I'll take note here. We have a $207,000 death benefit when we use the ExecuDex and accumulation solve, and that was roughly $48,000 a year she could borrow from the contract. Maybe she wants a slightly higher death benefit, but still wants to take advantage of that high funding bonus rider. We'll click on that. And now when we run the illustration, the software is going to give us a death benefit that is larger, and that high funding bonus rider minimum premium is going to be $750 a month or $9,000 a year. So we'll jump down to page 7 here, and it'll make a lot of sense once we take a look at it. So now we have a higher death benefit of $326,000, right? We know sometimes clients are also focused on cash value accumulation, but they need the death benefit protection for their beneficiaries. And as we can see, she's still going to receive that 1% bonus as long as in contract years 11 through 30, as long as she pays that $9,000 premium contract years 1 through 7. And then afterwards, if she wanted to increase her premium, maybe in year 8, she doesn't, or she can't, or doesn't want to pay a premium, and then maybe she wants to start back up in year 9, she can do so. We're just requiring for this high funding bonus rider to kick in that she pays that $9,000 or $750 a month, contract years 1 through 7. low funding bonus premium amount, giving us that 50 basis point account value bonus. And this comes out to be, $44,000 a year in income. So slightly higher death benefit, same premium. That means we're going to get slightly less income, but still very competitive, coming in at just over $44,000 a year. And the same holds true if we would select the funding bonus for low. That's going to give us a slightly higher death benefit, equaling a $9,000 premium for the low funding bonus rider, giving us a 50 basis point index credit or bonus contract years 11 through 30.